Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at ODNA, and I'm joined here today with a really exciting guest. This is Lydia Patel. She is a full-time pharmacist and short-term rental investor. Lydia, thanks so much for joining the podcast.
Hi, thanks for inviting me. Happy to be here.
Yeah, so I first got introduced to you through your YouTube videos, for which you seem to have a massive following already with your sort of burgeoning portfolio of short-term rentals. But I was hoping you could just start with a little bit about your background and how you sort of ended up in the short-term rental world.
Yeah. So like you said in the introduction, I'm a full-time pharmacist, and running a business or investing in real estate wasn't really in any of my plans. But around 2020, I started learning a little bit more, and that was kind of a time when we thought, you know what, let's give this a try. Let's learn more about real estate investing, long-term rentals, and short-term rentals, and give this a go. So we actually first started with a long-term rental and felt it was pretty straightforward. The whole process of analyzing a market and just understanding market rents and how much a property should sell for on a market. And that kind of got the bug started, and we were interested in learning more. At the same time, at our primary home, we actually have already a tiny house in our backyard that I built for my parents. And we never thought to rent it out as a short term rental. But real estate bug is like a weird thing. Like once you have that idea, you're like, wait, this is sitting right here and they don't live here for at least 6 months of the year. So why not try to rent it out on Airbnb? We've stayed at Airbnbs throughout all of our travels, like for the past decade. So the concept isn't new to us, and we figured, you know what, let's put it out there, see if anyone likes it. And being in our backyard, it was just a lot easier because if you made any mistakes, it was easy to correct them. And it was a really good introduction to all the software, all the processes that you would need, all the analytical tools that can help you figure out how much should I even price this tiny house in the middle of nowhere. So that was cool, and we were like, yeah, we can do this. We can actually it's going well, and we could look into scaling and doing more. So kind of around that time we started looking at maybe investing in a different market, and first thing that came to mind was where would we want to go if we went on vacation? Since we live in Minnesota, the top places were all warm places to escape the winter for us. And so we started kind of honing down into like Texas and Florida and studied simultaneously a few markets. Ultimately, we chose Northern Florida for kind of the family friendly nature of that city. It's big enough, but also like not spring break party city type of a Florida town. And that would fit our needs. And we figured, you know what, if we also like to travel in a big group, either with friends or with grandparents, I'm sure someone else also wants to do that. And based on the data we figured out at that time, like a 5 bedroom house would bring in disproportionately more revenue than a 4 bedroom house, but housing cost wise to purchase this thing would not be that much different. So that's kind of how we narrowed in on, picking the market and choosing to invest in a property down there. This was a partnership with a few other family members. So it was a fun project, and it was a really big learning curve going from house in our backyard versus something that's so far away.
And it sounds though, and sort of reading between the lines, that you're already sort of maybe a data person, like someone that like the fact that you're like revenue managing your tiny home makes me think that you were inclined to want to dig into the data, that you were wanting to take it to that next level. Is that right?
Yeah, I find it enjoyable to just understand the data, and I find a lot of peace in if you have some numbers, then at least you have some confidence behind that decision. I think that comes from maybe partly my healthcare background, like, you want some evidence to support these decisions, and also, I know this is not what I grew up with, this is not something I went to school for, this is a completely new skill set, so I definitely wanted to make use of data and make the best informed decision that I can.
Yeah. So in sort of digging in and sort of coming to that sort of 4 to 5 bedroom property in Florida, like How do you, and this could maybe be a little bit about how you were thinking in terms of future investments, but, like, how do you get comfortable with, like, what a property is gonna earn? 'Cause it's something that and I talk with people all day, there's all these calculators, but, like, I get the sense that you're not someone that would is just gonna trust, like, what a rental calculator is gonna spit out.
No, no, I did try, like, the rentalizer and just put in the address, but definitely didn't trust that, because I need more. I need more than that. So, like, my process that I decided, would give me more information was just going a little more granular, like, look at all the similar listings, 4 to 6 bedrooms, basically anything that my target audience could also be searching for. Like, if they search for a vacation in this area, what are the other places that would show up that would be comparable to what I would like to purchase? And from there, I studied kind of their occupancy, their average daily rate, and came up with came up with basically a figure that I felt more comfortable with based on the market at that time. I think this was partly beginner's luck that it worked out. There are now things that I look back, I'm like, "Man, I didn't even consider, in my initial projections for a projected revenue," because a lot of data actually looks backwards of how these properties have performed in the past year, but how they do in the future, like looking ahead, which places are actually booked, what prices are they commanding in the future. That past versus future concept, what that was not there. So I'm partly lucky that it worked out. But now that I know, I do take that into any future projects.
So getting a sense of like, all right, how are things booked out in the future? How are different properties sort of how is their occupancy looking? And in that sort of market segmentation, let's say you're looking at 5-bedroom properties, like how are they booked out now? And maybe how could I expect my property if I was owning it today to be booked out?
Exactly, exactly.
Yeah. So this sort of notion of all right, you're going into Florida, you're have an idea of the type of property you want to buy. What was sort of next in that sort of journey?
Yeah. So next in that journey, once we've kind of picked out this is generally the market we would like, and we would like to purchase roughly this size house there. Then we connected with some realtors who could be sending us listings and just make the search easier. I've found that in general, Florida has been pretty open. Like there are a lot of realtors that were very open to working with outside investors that aren't nearby. So all of my property viewings were through FaceTime, and we just kind of walked through a bunch of different potential properties and placed a bunch of offers. It was quite competitive at the time. And so it took a little bit to finally get to closing on a house that we wanted.
Yeah. And so what once you found the spot, how now have you hosted it?
Oh my goodness. So I started April 2022. It's
Okay.
been, yeah, like almost 3 years. It's
Yeah.
crazy. Time
uh,
flies.
How's it going?
It's going well. It's like, this is more me, maybe, I feel like I'm still a beginner, and so, like, objectively speaking, financially, it's been doing great, but when I get a slow month, like December was strangely slow for us, I would just go down like a spiral of like, "What am I doing wrong? I've made a mistake." And then, a couple weeks later, I tinker with my pricing, I tinker with my listing a little bit, and then boom, like 3 bookings come in. I'm like, "You know what? You've done this before. This has happened so many times in your 3 years."
Uh-huh.
It still gets to me. It
Yeah.
still gets to me.
So now as you sort of think about and continuing to expand, how do you think about like investing in the property that you have versus expanding to other markets? Like what's sort of next in terms of like short-term rental investing if you are wanting to do something next?
Yeah, so we're certainly looking to add to the portfolio kind of slowly over time. And in terms of looking, like, where would I look, versus reinvesting in the same property, we initially, our first thought was to invest in a new market, just because I think if you can pick a different place that has a different seasonality pattern, it takes that stress off a little bit because one property might be really doing well during the summer months, the other one might be doing better for spring break and winter. And and you kind of have this income spread out throughout the year. And so we were initially looking for somewhere between Minnesota and Chicago where we have family. We make that drive all the time. It would be a really good meeting spot for our friends and family. So there's like a personal reason for it. And I've also seen a lot of investors do well in that area. So I kind of just started digging around, honed in on Wisconsin Dells ish as an area. And I was like quite committed. I started talking to realtors and studying the different like property sizes, what would make the most sense, and understanding the regulations and whatnot. But as I continue to study a little bit further into it, it seems like the market has really, the supply has really gone up in that area, and just assessing the potential revenue and the property, the investment that you would put in, it seems like a lot of work for a smaller amount of revenue compared to say like a big beach house in Florida. And so we're like, "Ah, is this really worth the effort of going to set up in a new market, meet new cleaners, meet new handyman? Like the whole operations has to be reset up basically." And then at the same time, we are doing our kind of monthly, every other month market reviews for Florida. And we're noticing the top performing places all have a pool. We're like, should we add a pool? Maybe this would help us with our revenue and kind of take it to a next level. And so we started diving a little bit more into that data and just comparing the cost of what we would put in to add a pool. That's
Mhm.
definitely less than buying a whole house. Um, and the potential returns is comparable. There's roughly, based on my math, like a $30,000 difference, pool versus no pool in my market for my size of house. So I think that's where we're leaning towards now. Like, is this a better use of our capital at the moment? We're still open to the idea of adding another property. That's always kind of back of my mind. But I think the pool has proved to be the more beneficial thing right now.
Yeah. And so when you're sort of estimating that sort of 30,000 value, and is it just like going in and finding properties that are operating with a pool, without a pool, like roughly the same other characteristics? Because it's like it's not like you can empirically say like a pool's going to add like $30,000, and it's hard to say that with confidence. So like, how did you get confident that it would make that much more money?
Yes. So, I similar to how I studied a new market and decided like how much a property could potentially make, I looked at the current listings in the market, roughly the 4 to 6 bedroom range, and kind of segregate it into like two spreadsheets. These are the ones with a pool, these are the ones without a pool. It was really easy to find that out just through the amenity filters and whatnot. And then I would painstakingly go listing by listing, kind of study their calendar, how they're pacing, how they have performed in the past year,
Mhm.
and like obviously there's like the quick dashboard overview of the revenue
Yeah,
of
some
on
summary
average
view.
how have
Yeah.
they been doing. But I think
Uh-huh.
kind of going through by listing helped me eliminate, okay, this one they just started, so like the data is a little skewed. This one is like 10 bedrooms and like this massive thing that I cannot compete with. So it helped trim down some of that information, and that gave me some confidence, like, "Okay, this is where this data actually comes from, and now I can go make that decision." Obviously, the same caveat still applies. A lot of this is looking backwards. So there is some projection of what will happen in the future, which, you can never be 100% certain about, but I think that's everything in investing. You'll never fully know until you do it.
Yeah. It's interesting some of the markets that I've been analyzing around like the impact of the pool, like as supplies gone up, like it's not that a pool has incrementally added a whole lot more revenue, but the properties that don't have a pool have just their revenue has dropped that much more at a time. So in terms of like looking now versus projecting in the future, if you are in a market that's seeing increased supply, like whether or not that increased supply has or doesn't have a pool, or sort of how that market is trending, of like, and going in and looking at the supply graph of like, all right, all the properties with a pool, well, like, and it was about like 20% of the market, now it's 40%. And like now 40% of the market has a pool, like it seems like to compete, and then like how has the occupancy changed for those properties without a pool versus not a pool might give you some better insight on like how could, as I project in the future, would I maybe maintain or and grow a little bit with a pool versus if I didn't, like that and I could see significant decline maybe in the revenue that I might get next year, something
Yeah, I
like that.
agree. That is such a good point. And so, like, yeah, like you said, the comparison isn't me currently without a pool and how much I've made last year versus if I added a pool and what these people are doing. It's the pool projection versus if I stayed no pool, whatever the decline might be. And like you said, like I've observed that I'm already like on the higher end of the no pool group. So there's not much room to maintain this. It might be a slow decline if I don't add a pool.
Yeah. And maybe that's a good transition into and you said you did this sort of market you do these market reviews like every month or 2. And I feel like it's something that not enough investors, hosts are doing of like you go in deep when you make that investment
Mhm.
and then, like, you sort of get into operating your property, you're sort of focused around pricing, but getting that sort of base understanding or maintaining that understanding of how your market's performing, new properties that are coming in, like, what are you sort of trying to get to when you're doing market, overview sort of checkup?
Yeah, I think part of it is just wanting to benchmark, like, am I doing a good job or not? It's hard to know if you're covering your costs. It seems like, well, that's good enough, isn't it? But I think having some concrete numbers of this is how everyone else has been doing, gives you some context. There are also some bad months where I'm like, man, this was terrible. And I go in and yeah, everyone has done terribly because it's hurricane season. Like literally nobody's here. So that like I'm like, okay, well, yeah, we did actually fine.
Yeah,
Um, relative to how the market did. I think that's one. And then the other one is if I didn't log in and check, how the market is doing revenue wise and observe, who's kind of the top of the leaderboard type of thing,
uh-huh,
I would never have noticed this pool thing. So I could have gone like years and years and just observed revenue declining. And then one day I'll be like, you know what? Just throw in the towel and like we put in so much work in the beginning, setting this up, studying the market, picking this house. The studying of a market dashboard really doesn't take that much time. I think that's a good practice to build in. More often than not, the reason I don't do it is only because I forget, but it's such a good practice. It's a good practice. Every time I do it, it's like, wow, useful information came out of it. It takes like 10-15 minutes to quickly look at a market that you already know.
yep. And so in getting a sense of how other properties are doing, are you looking at like I mean percentiles for the previous month, or do you have like a list of properties that you're going in and like, I want to see how they did and like just checking in on their monthly performance?
Yeah, no, month to month, I don't actually go that granular. I look at the big picture numbers. I also look out for any new properties because that's always interesting. It's like, oh, well, this person added a new space and it looks nice. And sometimes I get inspiration of what people are adding to their houses. A lot of people have added, some version of either mini golf and bocce ball, and so that doesn't immediately make me want to add that also, but it's added to my brain space of like, okay, this is what's happening in the market. It's good to know, keep up with the competitors.
Yep. And then maybe digging in a little bit on your and sort of analysis of the Wisconsin Dells area of like, what was it when you're looking at it that sort of turned you off and that and maybe showed told you that this might not be the best market to invest in? Because assuming it made it past your initial filters of like, and if you're starting with quite a few markets that you're potentially looking at, it sort of made it through that initial filter, but then it did, and what it sounds like didn't make it through your deep dive. Sort of, what did that sort of process look like?
Yeah, so I think the initial filter wise, property prices in Wisconsin Dells are very reasonable. Like they've gone up, but they're still cheaper than a beach house in Florida, let's
Yeah.
say. Um, and so that was intriguing. And then the revenues were relatively high compared to how much a house costs, which is why like it kind of got on my radar in the beginning. But then as I, dove deeper, I forget, I think it's within the 2 to 3 bedroom range, which is what we wanted to look at. We didn't wanna do another massive house. I believe they're, like, maybe, like, a townhome or, like, group of homes that are within an HOA, kind of almost condo style, but technically a house, that had amenities to a community pool, a community water park, and they kinda brought the numbers up a little bit. And so once I removed a lot of that detail after I studied it in further detail, I realized, okay, it's not actually as big of numbers as I had initially hoped. And then on the other end, like looking at Zillow, looking at actual houses that are available for sale, what the sales have been going for, the market has definitely gone up as far as housing prices too. So it was difficult to find a place that would work well. There is also a huge range in the market in terms of housing prices. Like certain areas, yeah, they're cheaper, but they're not like necessarily what you would
Want to use as
wanna
a
book
short-term
as an
rental. Yeah.
Airbnb as a
Mhm.
consumer,
Yep.
right? So, yeah, some of that deep dive understanding it's always disappointing when you, like, put in all the effort and you're studying a market and you have to walk away, but I think I did this a couple years ago when we studied, kind of the area outside Austin. It's the same thing. You put in the effort. If it's not right, it's better to lose that time up front than enter into a bad investment and then deal with all the downsides later.
Yeah, because yes, there's a lot of work that goes into researching a market and researching properties to buy, but it sort of pales in comparison to the work of setting up a rental, and getting it launched.
Yeah,
Uh,
for sure. For
uh,
sure.
yeah.
Yeah.
So you sort of said and this analysis around not doing dells, potentially doing a pool, is that sort of the next step is that you are gonna make that investment of doing a pool in that property?
Yeah, so I think, the pool we're strongly leaning towards the pool. The 2 kinda missing pieces, is 1, our, city has a limit of how big a pool you can have based on the lot size. So we need, like, a proper survey done to even get that nailed down. Like, if all we can have is like a like a 6 by 6 square, then that's not gonna work, you know? We gotta make sure that that actually is a thing. So that's step number 1. And then the second thing that I wanted to do to just get full confidence that this is a good idea, because pools, yeah, it's cheaper than the house, but it's still very expensive, is I was gonna follow up with those same market analyses that I just did, but in a couple months and see if I think we're kind of at a weird transition time with like a new administration coming in. Everybody's like uncertain about what's gonna happen. Are the rules gonna change? Are taxes gonna change? A lot of things, I think in a couple months, we might have a clearer picture of what we can come to expect. So I'm planning to redo that analysis and make sure have things changed drastically in this time frame, kind of reconfirm. Usually the slow time for us is like September because hurricane season. So I have time to think a little bit more and make sure I'm getting the right decision. And then after that, then we can once we've decided, then we can do the contracting and the pool design and all the fun stuff.
Yeah. No, that makes sense. And you sound like a very, an informed operator on your short-term rentals.
Do
So,
I?
like yeah.
I don't know.
At least coming from a data person, like, you're analyzing the data in a right way. Like, I loved sort of the analysis that and how you think about doing the analysis, like, you can't just trust the overall numbers. I gotta go dig deep a little bit deeper and look at those comps and figure out, like, "Oh, are there some outliers that I need to pull out when I'm getting to those overall averages? Because 1 or 2 properties that are sort of outside of the norm can really impact on what those averages say. And not understanding that can lead to a potentially bad decision. And it's hard and looking at it, and in my view, from the product side of like creating ways to remove all those outliers all the time, where it's got to take someone that's making a decision to I know which properties that should be included versus not, and be able to take it to that next level.
Yeah, and to your point, I feel like there's no even as you continue to, like, update the product of the analytical tools, there's always like, for example, some people didn't check their pool, as an amenity on their actual listing, so how will any data analytical tool catch that? So there's always some level of human combing through the data that has to happen.
Yeah. And I know in talking with the Airbnb team, they're like, yeah, that they're starting to do like AI analysis of the photos to like check the box when it's like not there. And then like there are a lot of people like they'll like show this picture of a pool that's like in the neighborhood. It's like,
Yes! Oh my goodness, yes. That annoys me so much when that happens.
yeah.
It's a
You're like,
tangent.
that's a neighborhood pool. Like that does not have the impact of like a pool in your backyard that someone has
Exactly.
private access to. Or like what the impact of a view is. Like you might say that you have a view, but like, it's a partial view in the winter versus like you're on top of a mountain with expansive views like year round. Like,
Not the same.
yeah, and especially if summer's your high season, you're not gonna get the sort of impact of that view during the time on the ADR when and it actually matters.
Right, right, exactly.
Yeah. So, and those, like, I feel like you can only get to if you're, like, actually going through the listings, looking through the photos, and sorta and what it looked like you were doing was and I highly suggest this to people when I'm sort of helping them analyze their investments is, like, export the data, have a sheet, like, and, like, make notes on each property because that's one, it's gonna be really helpful when you're sort of getting the sense of, like, "Alright, this property earned 100,000, and like, yeah, it's a little bit better in terms of location. It's a little, I mean, it's got roughly the same amenities. So like, I mean, I've got to discount that maybe a little bit because my property's not quite as good. Because you're never gonna find like a one to one. Like this is exactly the same property. Either looks like me and I should be pricing like it, or like just like they might not be doing like dynamic pricing and like their revenue, like, yeah, they earned $100,000, but they should have earned $140,000 if they were doing it right.
Yeah, so many good things you said. I also do the export tool, and I actually add a couple columns. I just title them plus and minus, and so I would make notes of, yeah, this one has, I don't know, better location, or the minus would be the photos are terrible. And as I go through, like, it's so hard to remember which property was what because after you go through 30, you're like, yeah, they're all about the same. They're the same thing. So having those notes is so useful. And then you mentioned pricing. That is also so true. There were as I was going through all the listings, there would be places that I'm like, "This looks beautiful. It's a great location. What happened to you guys?" You just don't know. Like, maybe they just had no minimum night stays for their weekends, and they're getting just one-night bookings or whatever they did with their pricing just didn't pan out. So those are anomalies too that you have to look out for as you comb through the data.
Yeah. And I'm interested in how you think about it of like, if you see a property that's beautiful and then you see that they're not dynamic pricing or they're not like, they could be earning like 500 a night. They're earning like $250 a night and they're running a 90% occupancy. It's like, on one hand, like, yeah, you're under earning. And then you're also like, I know you're going to get booked first when someone's coming to this market because I'm not gonna be competitive on price with you.
Exactly, and I think that also adds to why you have to monitor the market a little bit. I think especially as supply goes up, sometimes the ADRs just drop and you have to follow along, unfortunately. That's just how it goes. You can't be that one that is too highly priced and get bumped to the back of the algorithm on Airbnb.
Yeah. No, that makes sense. Is there anything that and you think that you do that really sort of sets your sort of process apart, sets your properties apart?
Oh my goodness. As far as like um the property, I think I really try to approach it as if this was my family coming to stay and I really want them to have a good time, how would I be talking to them? What would my communications be like? I tend to view it from that lens. They're not a customer, they're truly like a guest at my house. I think that is something that I hold on to from like a hosting standpoint, that this is important to me. These are, fellow humans and guests that I want to be I want them to have genuinely an enjoyable time. As far as the operations go, I feel like I am still such a beginner. It's been like 3 years learning, and I continue to find new mistakes that I'm making, and I'm correcting them. And so, I think what I've learned throughout this process is all of this is doable. You can figure it out as a side hustle if you have a main job that has completely no relation to real estate or anything. You can figure it out, but it takes work, and I think, sometimes it's, like, not as obvious to folks who are, watching a couple of YouTube videos and learning about it. There is a lot of analyzing that goes into it in the beginning. The operations take a lot of time to refine, even if you are learning a lot from other people, putting them into practice still takes a little bit of refining and honing throughout the times. So, no, I definitely encourage everyone who wants to get started to just get their education, get more information, and just start practicing, running those numbers and keep at it.
It's funny when I talk with people, like, I tell them, like, just try to come up with your own numbers around a property. Like, even if you're not ready to buy yet, just, like, take a home and go through that process, because the more you do it, the better you're gonna get. And it's gonna also kinda get you excited about what you could be doing of, like, going through those listings, seeing what they're doing, reading guest reviews, seeing how happy most guests are with the experience that they have in those properties can really, I think, help sort of provide that impetus of like, all right, like this isn't that hard. Or even like looking at properties that are just like terrible. And like
And you're like, "I can do better than
I,
this."
I can do better than that. And like they're earning good money. Like, and
Right.
I
If
know I
they
can
can
beat
do
that.
this, I can do this. Yeah.
Yeah.
There's definitely a little bit of that. It yeah, it is definitely a learning curve, but the more, you run the numbers and project how much, a house on the market can make, the more you feel that confidence. I think when I was first starting, I was looking for real estate agents, and there would already be ones, there might be more now, that advertise that they're like short-term rental investor friendly. And really what they do is they actually just screenshot the Airbnb dashboard and they paste it onto a property. And I always found that funny because I'm like, I can't take your word for it. And also that needs to be a skill that you as an investor learn, because your realtor is good at the connections in the community and finding the properties. You are the one that needs to run the numbers, because ultimately it's a big purchase.
Yep. So, Lydia, I really appreciate you sort of joining the show and sort of walking us through your journey. Really excited to sort of see what you do next. See the sort of, I'm sure the whole process around adding a pool. And if you do it, I know you've sort of been spot on your sort of earning projections. So be able to see what the impact of that pool would
Fingers
be.
crossed. No pressure.
And then also, like, if you do go into a new market, seeing, and what you choose, because 'cause I'm sure you'll have really done your homework on making that investment. So, no pressure.
No pressure. No, thank you for having me on, and, whatever the next steps are, I'll be sharing that process, the good things, the bad things, mistakes, all of it.
And if people wanna sort of, listen in, watch, how do they find you?
I'm, on YouTube, just under my channel is just my name, Lydia Patel, and I routinely put on updates about my beach house Airbnb and whatever next project I get up to in terms of real estate investing. So, yeah, I appreciate your support.
Yeah, you're definitely part of, my regular check-ins on YouTube, so,
Oh,
excited
thank
to see what's
you.
next.
Awesome. Thank you so much.
Thanks.